Thank you everyone for your resilience and sustainability all the way to the last insurance session of the day. Um, we've discussed a lot about the PSI agenda today, the Principles for Stable Insurance, and also the program of work for this decade. And the last panel, we touched on climate smart insurance solutions, particularly for vulnerable communities. And I think we touched a lot about insurance in the context of non-life or property and casualty insurance business. So for this last session, we want to focus more on the life and health agenda of the PSI, and we have two speakers who will be sharing their views here. We have Ed Moncrief, who's the CEO of HSBC Insurance Life in Asia, right? What's the other entity, Ed? Insurance Life? And HSBC Insurance International. And he has a footprint across Asian markets, primarily Hong Kong and Macau, but also Greater China, India, and actually, huh? And Singapore as well. So he's quite, well known in the industry. He's also on the PSI board, and he's actually the champion for the PSI's life and health agenda globally. And it's great to have a CEO like Ed, who has been in Asia this past almost decade, spending his time with HSBC Insurance to talk about life and health and the sustainability agenda. And we also have a long-time PSI supporter, George Thomas, from the Indian Insurance Institute. I remember when the PSI was born, one of the first invitations we got was come over to Asia and speak to us about the principles for stable insurance. And at the time, we had nothing to talk about. We simply had the four principles. But now the agenda has expanded. So I think it would be good to have also George having a view from South Asia. But he's from South Asia and India, but he's actually is quite an international ambassador for insurance sustainability. He's involved in the International Insurance Society, the Insurance Development Forum, the PSI community as well. So I think we have two really good speakers who can speak with authority on the Asian market. So let's take the stage, guys, and run this last session. So I'll just frame it very quickly. So the sustainability agenda in insurance, as I mentioned earlier, has been framed largely from a non-life insurance context because people think about climate change and coastal communities affected by extreme weather events or cities. But the PSI was meant to encompass all lines of insurance business. And when you talk about life and health insurers, most life and health insurers will tell you that their sustainability agenda, they have a sustainability agenda on their investment as responsible long-term institutional investors, which is not something to be scoffed at. It's a big undertaking to commit your assets to sustainability. But we also are here to debunk the misconception that life and health insurers as underwriters don't have a role in sustainability. And actually, they're going to tell you they have a big role in that aspect. So first off the bat is Ed Moncrief, and I'm going to ask him to share his views about his company first, and then I'll follow up on the PSI front on what Ed and HSBC has done there.
Can you hear me? Great. Well, thank you for having me, Butch. Thank you for you guys for making it until 4:15. I'm the chief executive of HSBC's life insurance operations out here. We're a market leader in Hong Kong. We're a pretty sizable business in Hong Kong. We write about $5 billion US of premium. We manage about $100 billion US of assets. We 100% own our subsidiary in China, where we have a large growing agency capability. We're a top 10 insurer in Singapore and one of the fastest growing in India with our joint venture with Canara Bank. And I am very much a life and health insurer. Before I moved to Asia 8 years ago, I was in Brazil. I ran a pensions business in Brazil. And I wear a couple of other hats as well. I chair one of the biggest private hospitals in Hong Kong, which is fascinating and great because it really allows me to see the supply chain in action for our industry. And I also chair a mental health charity in Hong Kong as well, and that's a subject which is quite important to me and which I think the insurance sector more generally, when it comes to the S of sustainability, the S of ESG, needs to do a lot more work. And as Butch said, he kind of stole my intro actually, because yeah, I mean, we used to have some property and casualty companies around the world. We divested of them after the financial crisis, but fundamentally ESG in our organization, firstly, I also have a bank. Okay, there's a small bank called HSBC as well, which we're a part of. But ESG for insurance really to us became relevant through the non-life lens, through the property and casualty lens, right? Because ultimately we were writing risks on so what I'd call, planetary risks, whether that be property insurance in Hong Kong or Singapore, being exposed to typhoons, etc. So clearly, when you have financial skin in the game, you take an active interest in managing this, in understanding this, in mitigating this, in raising awareness for this, and ultimately, the 4 principles of sustainable insurance were very, very relevant from day one, and we were one of the original signatories to the PSI. On the life and health side, it was always a bit more abstract. To be frank, the only team in my business that really ran this at the forefront was our investment team, because they're long-term investors, and when you're holding billions of dollars of 30-year corporate bonds to back universal life portfolios, you're taking quite active interest in whether these companies and whether these risks are going to be around in 30 years' time. And then you're starting to deep dive into transition risk and ultimately, how are these factors going to increase on your underlying sort of investment holdings? So it wasn't really something that was relevant to us. Well, not relevant, but it wasn't front and center. So I joined the PSI board in 2019, I think, 2019. And it was, I think, to be frank, and inevitably so, quite European-centric and quite property and casualty-centric. As Butch said earlier, this was the low-hanging fruit. I was volunteered or voluntold to chair a life and health work stream. And, ultimately, what we did, we wrote to all of the PSI members around the world, all the life and health insurers that were members. And we said, well, what does ESG mean for you? In your core business, in your insurance business, not in the way you manage your investments, but in your core business. What does ESG mean for you? What are the opportunities? What are the risks? And how can PSI help? And the results of that survey were really, really interesting, actually. Firstly, it said, what insurers around the world told us was that they felt a very strong affinity with the UN Sustainable Development Goal number 3, which is around good health and well-being. It is in life and health insurers' core business to keep people living, keep people alive, and if they could reflect SDG 3 more centrally into their business models, that would be a good commercial and a good public sector outcome. All of the key ESG risks, the top ESG risks identified by life and health insurers were social in nature. And again, that shouldn't come as a surprise, because when the property and casualty company is ultimately writing physical risks and litigation risks, when we think about what life and health insurers do, we write human risks. So the risks we're writing are inherently driven by social factors. And what life and health insurers were telling us was actually things like inequality, things like obesity, things like financial education. These were the key factors that were effectively risking the business models and the long-term sustainability of their underwriting practices. And the third thing that the survey told us was the single biggest issue or the single biggest bottleneck for life insurers to really embed ESG into their everyday decision-making was their underwriting models. And underwriting models had effectively evolved over 20, 30 years. They certainly did not account for ESG factors in any way, and they were inherently exclusive in terms of we write good risks and we don't write bad risks, with very little shades of gray in the middle. So we took that research and we took that member-led feedback and we tried to solve for it. So we set up a task force, I think, about 2 years ago. We got 12 interested insurers from around the world, from North America, from South America, from Africa, from Europe, from Asia. And we set out to build an ESG underwriting guide for life and health risks. And as Butch said earlier, that was released last year to coincide with the 10th anniversary of the PSI. And again, this is a guide. It's a first step to create something which had not existed before and to provide a little bit of a direction to insurers around the world around how to tackle this subject. And what the guide does is it stresses the 4 key underwriting risks that life and health insurers write. They write they write mortality risk, i.e. the risk you're going to die too soon. They write longevity risk, i.e. the risk you're going to live too long. They write morbidity risk, i.e. the risk you're going to get sick and you're not going to be able to gain an income. And they write hospitalization risk, which is the risk that you're going to have to go to hospital in the private sector and not be able to afford it. Now, everything life and health insurers do, wherever you are around the world, whether it's with profits, participating, universal, whole term, group, individual, is in some way related to those 4 risks. So all we're trying to solve for is those 4 risks. And what we did then, with the help of the PSI, we mapped those 4 risks against a range of ESG themes, such as climate change, biodiversity, human characteristics, etc. And then we mapped every single one of them in a 3rd dimension against underlying ESG factors. So, for example, the spread of zoonotic diseases, antimicrobial resistance, things like obesity, smoking, drug addiction, financial education, and basically provided some insight as to whether these ESG risks materially increase or decrease the underlying life risks that you are underwriting. And if so, what you can consider doing about it. And I think that last part is probably the most valuable piece. The rest of it is largely subjective. It's to provide a guide and a framework. But fundamentally, the most important thing is around what can you do about it. Yes, you can factor it into your underwriting models. Yes, you can factor it into your pricing. But in the long term, if you want to improve your risk profiles across these 4 key underwriting risks, how can you mitigate the risk impacts of ESG risks? And again, the analogy I always use is 400 years ago, if you were a marine insurer in Lloyd's of London, when you met with your insured client, you'd give them your maps. You'd give them known maps of piracy locations in the Caribbean because you want your insurable ship coming home without a loss. Life and health insurers in most parts around the world have been pretty bad at doing this value-added service or risk mitigation stuff. So ultimately, there is a lot we can do. And I think what the guys hopefully fleshed out are some of those activities. And moving towards more education, moving towards more prevention instead of reimbursement. There's a lot of things that can happen. And yeah, hopefully we're giving people a bit of a nudge.
Thank you, Ed. So I think there's one thing already that we can pick up from what Ed said, which is, and personally, people use the term ESG a lot, and we created that term at UNEP to mean, specific issues like climate change and biodiversity under environmental, social issues like human rights, and inequality under social, and bribery and corruption under governance. But I think what is important is that you don't get stuck at the ESG level, because if you get stuck there, it's a dead end. You need to go to specific issues, and that's why this guide unpacks it. What are ESG issues in a life and health underwriting context? So obviously infectious diseases were there, antimicrobial resistance, obesity, etc., in addition to climate change and others. So I think it's one thing. Ed, my question to you is that obviously this first ever ESG guide for life and health underwriting portfolios is a big boost towards the ESG agenda for the life and health insurance industry. What has this done to your company, right? Has there been a positive impact, I hope, but but your leadership in driving this together with 11 other life and health insurers, what has changed or at HSBC Insurance that is a positive effect, hopefully, of this work?
Yeah, I think, and it varies by market, right? I mean, some of our markets are more advanced or progressive than others. But I think what it's done first and foremost is take sustainability away from being a discrete team and a discrete function in the business and embedded it throughout. And that's quite a big boundary change. It's quite a big paradigm shift for an organization of kind of our complexity. But certainly up until very recently, and it's not just our guide that's done that, there are a lot of other contributing factors, but certainly until recently, sustainability in HSBC has been agenda item 12.2 of the board, right, or of the EXCO, of the risk management meeting, or whatever. And there's been a discrete sustainability team that's been focused on doing communications and providing some level of risk stewardship. What I think the guide has helped to accelerate is this shift from sustainability being an ad hoc, slightly separate piece to being fundamentally embedded into the business. Right? My chief underwriting officer is a lady who has, signing authority up to $150 million US per life. But up until 3 years ago, she'd never done any ESG training. She'd never done any sustainability training. If ever a subject around sustainability came up, it would be, I need to escalate to someone who knows what they're talking about, right? Now it's her responsibility. So, and that's just one example, and it's across the firm now, and I think it's kind of democratized sustainability in a way that wouldn't have happened perhaps otherwise.
So it's also upskilling, right, and reskilling people, because it's now an important business expertise rather than a nice to have type of thing.
Yeah, and maybe I'll just say as well, we're not a charity. We're not a charity. Sorry if there probably are some charities here, but we're certainly not a charity. We have shareholders. We have a cost of equity. We need to deliver a return on that equity. And ultimately, these are driving commercial outcomes and business opportunities as well. So I'll give you maybe one example, right? So a couple of years ago, we expanded our list of available beneficiaries that we have on all of our policies. And, as you know, all of you life insurers will know the legal concept of insurable interest, right? And in Hong Kong, as an example, that's defined by law, and it's defined by blood. So actually, and the law says, and I quote, between marriage between a man and a woman. So actually, legally in Hong Kong, you weren't allowed to take insurance out on your same-sex partner or your cohabiting partner, or even your grandparents or your grandchildren. And that's huge. We saw a huge opportunity for this because there was a large part of the population being excluded from our industry because of laws that were literally 200 years old. So effectively, we just changed all of our underwriting manuals. We changed all of our beneficiary rules. We introduced a very simple legal declaration for customers to sign, and we marketed the hell out of it. We upset a few traditionalists, but ultimately we saw that wealth transfer, which is what life insurance enables, there were huge pockets of wealth in southern China that were wrapped and stuck because they couldn't be transferred to their loved one or their grandchild or whatever. So if we could go to market and say, actually, do you know what? This is core to our this is core to our ESG agenda, this is core to us being a more inclusive organization. And by the way, we're going to make quite a bit of business out of this. It's a good outcome.
Right, so that echoes the insurance for everyone of Green Delta Insurance earlier, and your motto. I think it's nice to see inclusivity in action, and it's really central to the sustainability agenda. We cannot simply have an environmental narrative because, we had the 10th anniversary of the PSI, when we talk about those things like climate change and biodiversity loss, the end goal is not simply to protect the environment. The end goal is to make sure that we all have a quality of life and dignity that's worth living. So that is really the essence of why we want to achieve sustainability. So the social agenda is really core to the purpose of sustainability. It's not simply the planet will survive, it's us. How will we survive, and what quality of life will we have on this planet? Moving over to George at the Indian Insurance Institute. So they are the, yeah, insurance. So they are the capacity building institute on insurance in India. But as I said, George has been a strong and long-standing supporter of the PSI, but it would be good to have his take on life and health and sustainability in an Asian context.
Thank you very much, Bush, for having me over here, and thank you all for being present at this last session of the day. So let me just introduce myself from the insurance point of view, from the insurance company. I'm from the organization from which I come. I come from Insurance Institute of India, which is into capacity building, training, conducting examinations leading to insurance certifications like the ACII of UK. We have the associate and fellowship certifications, and also we do a lot of research as well as training for many of the countries in Asia and Africa together. Maybe I would have trained people, including the regulator, for more than 46, 47 countries in the last 10 years. And also I've been very much into capacity building of some of the countries. So let us, when we look at APAC, Asia Pacific, let us understand that, I'm the seventh speaker on this subject. Two were there in the morning, and we had Bush plus the three more, including Ed. We had three more people speaking, so I'm something like the sixth or seventh speaker on the subject. So let me try to touch upon things which have not been talked about, because a lot of knowledge has been transferred, a lot of views have been expressed in the morning. So let us look at in the Asia Pacific region, we have got Japan, South Korea, and Singapore, some set of countries which are fairly advanced and fairly developed. The rest of the Asia Pacific has got India, Bangladesh, Afghanistan, Pakistan, Myanmar, and countries which are on the track towards development. Here we find a separate set of problems, and which I would like to highlight over here. See, in all these countries, there is a governmental, in many of these countries, there is a governmental support towards sustainability. India and Bangladesh, in a very, very vocal manner, the government is supporting sustainability. Some of the insurance policies have been supported and sponsored by the government. They have been giving good subsidies and trying to reach out. In the morning, the speakers on general insurance and when Neha spoke about agriculture insurance, she was speaking about that, about the Indian support by the government. So let us look at, when we look at life and health. In life, we have seen in this area more and more events are happening. So there are more climate events which are happening, more of floods and related things. At the same time, we have seen that the human losses are reducing. That is thanks to the technology part and the early warning systems. So this is a sort of a general trend. People are able, with the advancement of technology, we are able to predict something happening. Other than an earthquake, in some places earthquake also is getting predicted in some way, even though it's not perfect. Other than earthquake and landslides, most of the things, like the storms, the cyclones, and all are being predicted a little bit in advance. And a prompt government can always save lives, which we have seen in India actually in the last 4 or 5 years. So that is in a way, the loss of lives are getting reduced. I have done a study recently for the government of India, on this, to see the casualties. Something like 20 years back, we had around 27,000 deaths a year out of climate events, out of natural catastrophes. Whereas in the last 7-year period, we are having an average of of between 9,000 to 8,000 deaths. I would say fairly close to 8,000 deaths in a year. So this has been in the last three 7-year blocks. We have seen it. We have seen the deaths reducing by 1/3. No, this is something which is not out of a fluke. I discussed with many people who are in the government, who are in the meteorological department and all about. So early warning systems. And when I say about India, the same holds good for most of our neighboring countries. So this is something which is just tangible and which is visible. Secondly, we never thought that a situation like the pandemic which happened now would ever happen. Previously, prior to pandemic, talking about ESG relating to health, people will be just raising their eyebrows. What is it we are talking about? But now we are seeing in reality it happens. But then it need not be always as big as the COVID-19. There could be small things which can happen. We have seen a Bhopal gas tragedy where many people lost their lives and many people lost their eyesight and many things happen like that. The next level could be something like a Tianjin explosion which happened in China, where the man-made, it was a large warehouse where there were explosions. Did people die? Yes, but very few, because it happened at the wee hours of the night, the wee hours of the morning. So very few people were there. But in each of these countries, it's a very sophisticated place. What we saw in Tianjin. Similar warehouses exist in India, exist in Bangladesh, exist in Pakistan, and they are not as well maintained as Tianjin. So these are all sitting ducks which can happen, for some kind of a catastrophe to happen. It could be a man-made catastrophe, which can cause deaths, which can cause injuries, which can cause radiations. These are things which could be real. Today we have not seen them, so we don't believe them. We have seen another thing which is happening post-disaster, post-flooding. There are cases where people get into health issues like widespread choleras, things like that. So which again is a matter where we are not sufficiently studied. Again, in some of these countries, because of the health systems being improved to a large extent, locally they are able to tackle such issues. So these are various things. In my opening remarks, maybe I'll touch upon 2 more points. When it coming to society has also changed. The society has changed. We were 30 years back, 20 years back, we were looking at a completely one man, one woman for life. Divorces have become more of a reality. Live-in relationships are there. The concept of one man, one woman for life is getting challenged in many societies. And would it impact the interest in life insurance? Is something which we need to think about, because it's not a single instance. It's not just few instances. Ed was talking about same-sex marriages. How is it going to impact insurance if it comes in a big way? So these are things which we need to talk about. And also there are other challenges, like in the South African community there are burial insurances, funeral insurances, which without that people can't live, because when somebody dies without a proper insurance coverage, when you are doomed after your death, people will be only cursing you. So that kind of, you can even see advertisements like that. So because a South African death is like a big fat Indian wedding where people come and they stay over for a few days. They drink and dance and make themselves merry, and there's a lot of expenditure which comes after that. So how is the social fabric changing about spending, about say destination weddings, problems associated with that, the costs of that, the kind of challenges which can happen along with these. So the changes in the social fabric, the amount of money which goes into celebrations, and again the risks which are associated with that kind of celebrations are all. There is a change in the social fabric. I'm not going to count the instances and give you specific instances, but let us look at it. There is possible that things are changing. If you look at a traditional Indian society or many of the Asian societies, an old woman, your grandmother, if she is hospitalized and she dies in the hospital, you will beg, borrow, or steal, however poor you are, and get her body out and give her a decent burial. But this need not happen in the future. You will say, I don't care about what you do with the dead body. I was loving her as long as she was alive. And now it's a different story. This is a trend which is slowly in the anvil of coming. It could come. So then, how far are your insurances going to respond to that? Your health insurance, unless you have a health insurance, a hospital may not really take you in. So there are different challenges, and of course the governments are answering it in different ways. And also on the governance part, if you look at it, there is improved focus on the boards about administration. The boards have become tighter with several laws in many of the countries. The boards are managing things better. There is a greater focus on what the boards can do, and the responsibilities of the boards, the responsibilities of the independent directors, and the board members being held answerable to things which go wrong. So on liabilities which can come in, class action suits, all these things are bound to change, bound to have some impact on the way the life is. So we need to look at ESG issues from certain new lights, and also from these kind of experiences from other markets.
Thank you for that really good overview and a quite expansive view, George. I just want to follow up on one thing that you mentioned. So you mentioned natural floods, for example, and climate-related events. If you ask Australians, for example, we're still in the Asia Pacific, right? They will tell you that natural catastrophes is not the number one killer. It's heat, which is the number one killer there. And when I think about climate change, and when we think about climate change, people automatically think about floods. And obviously, if you take the example of Bangladesh, early warning systems and cyclone shelters have really been effective in reducing loss of life. But have you done any study on extreme heat? Because when you see something in the news, normally it's some area in India which is like soaring temperatures, and recently the Philippines were looking at 40 degrees, which was unheard of before, and it's becoming more prevalent. But what is that issue? Has your experience been? And then I have something for Ed to follow up on.
Yeah, this is thanks, Butch, for focusing on one of the very vital and very challenging areas. When we look at heat and death, this is not an area where we have researched much, but by personal studies, I find that there is something related with the with the society and the environmental factors. If you see traditionally, the food in places like Rajasthan or some parts of Andhra Pradesh, which are highly prone to heat-related disasters and deaths, people used to have more spicy food all along, traditionally. They eat that kind of chilies in these two areas, and wherever there is a high level of heat, that food habits are completely changed. We can't, as somebody coming in from Kerala, I can't eat that food. It is that spicy. But traditionally, they have been having that kind of food habits. But there are studies which say that the spices, the chilies that you eat, they keep your blood thinner. They help in reducing heat strokes. But it has changed. The eating habits have changed. But then heat, what happens is that the youngsters, people who have to take care of their families, they go out and they brave the heat, and they are not even aware that this heat can kill them. So that is something that warning systems are not gone to them. The literacy part has not gone to them. This is an area worth studying. One is the social side, and also these are the people who need to be told to be home, and they are the youngsters. The strong people, the oldies are inside their house. They want the comfort of the house when there is heat. But the young ones, they just brave it. And many families have lost their breadwinners in that process. So it is something worth studying. I haven't done a study as such on that.
I think it's a really good example you raised, actually, because about extreme heat, right? Because you're right, we typically think global warming equals flash flood, coastal areas equals property and casualty insurers pay the bills. It's a P&C question. But actually, in the long term, and life insurers are long-term insurers, you know, the impact is no less, and in fact, arguably more. Right? So if you were to go to Australia as an example, you'd see a almost perfect correlation with the incidence of skin cancers as a result of this. So again, in the long term, that means more claims. That means more losses. It means increased cost of insurance. Now, what a number of insurers are doing about it in Australia is, again, doing much more education, much more preventative things, start to embed early screenings into, you know, if you're buying a whole of life product, you get annual screenings, as an example. There's lots of spot checks you can do for sort of non-cancerous skin infections and various other things, right? So I think it's a really good example. And China right now, which is sort of my business, my main area of attention, incidence of cancer is going up significantly, double-digit every year. And I don't know why. I'm not an expert, and I have lots of reinsurers and lots of academics telling me that these are the reasons why. And some of it is behavioral, some of it is actually around modernization, and actually the more people that have access to healthcare, the more people that have access to screening capabilities, which is now quite prevalent in China, the more people are going to claim. But some of it, I have absolutely no doubt, is environmental, and they're long-term environmental changes that we just haven't stepped back and looked at the trend line yet.
Okay, Ed, there's two more. I have two questions for you, and for you and George. We can't be talking about life and health without talking about COVID, right? What has been the biggest lesson for you as a life and health insurer? And we just had a global pandemic, and it was only until 2 weeks ago that the WHO said it's, you know, the pandemic is technically over. It's still, COVID is still there, but it's not like a global threat that it used to be. But what has been the key lesson for you in the context particularly of life and health insurance?
Sure, thanks. But I'll stick to the insurance side, not the investment side,
Yeah.
which is a story for another day, right? But I think the most fascinating thing is seeing how it has crystallized for life and health insurers how important ESG risks are, in a way that, you know, as we mentioned earlier, property and casualty insurers every day facing the bills of climate change and other ESG factors. This crystallized it for life and health insurers. Right? The US life expectancy is lower now than it was 4 years ago. I mean, that is uncontemplatable. The richest country on earth, people are dying sooner, and that was largely accelerated by COVID, and also fleshed out around chronic comorbidities like obesity and diabetes and other things, which are difficult to treat but easy to prevent. So I think on the one hand, that was kind of the key learning, and you know, how do we move to a more preventative insurance model rather than run around and try and deal with the aftermath of an insurable event. Secondly, I mean, markets like India, for example, where the entire life insurance industry, and particularly the reinsurance industry, has lost a lot of money because, again, mortality spiked and the market was pricing way too thinly. I think it's now forced a lot of actuaries, it's forced a lot of insurance practitioners to reassess what mortality risk, and particularly catastrophe impacts on mortality risk, can do. So I think there's a repricing of risk. You know, when we've looked at for the past 20, 30 years, life expectancy has been going up and up and up. And as George said earlier, kind of, you know, major losses of life have been getting less and less and less. This flipped this around very quickly and very, very suddenly. And I think for a lot of life and health insurers, it's less about how do you react to the next one. It's more about how do you proactively anticipate the next one and minimize your insurable exposures in advance.
Right, and I can be honest with you, when we launched the PSI and we were saying how the principles were relevant to life and health, I can tell you, if you look at my earlier slides 10 years ago, we had pandemics there. The thing is, I had to take it down because I was thinking more about SARS and bird flu. But then if you go to other markets, it's hard to connect. But now that we have COVID, I wish I didn't take it down because now everyone knows what pandemics are, right?
Yeah, and I think insurers need to step up more. Right? In some markets we are, in some markets we are, but I think insurers need to step up more around the long-term mortality and morbidity impacts. One, of pandemics, but two, of government or public sector or health sector interventions into pandemics. And some of that, of course, is on the social side and a lot of the isolation and inequality that was created as a result of lockdowns and others. But some of it is actually on the health side and the long-lasting health impacts of these measures. Right?
Georgia, do you want to add anything on
Yes, I would
COVID?
like to say that the biggest learning with the pandemic has given us is that it's about preventive care. Whether it is wearing a mask or washing your hands, once upon a time, we were struggling to tell people the importance of washing their hands. So you would remember that, people were taught about basic hygiene. In many of the countries it was a challenge, but then the COVID situation taught us that personal hygiene, and also it gave the government a lot of responsibility, and most of the governments have risen up to the occasion. The insurance industry, for example, they first came up with, some of the insurance companies came up with a no to COVID related hospitalizations, but the regulator put its foot down and said that all COVID cases have to be covered. If there is an insurance policy, it will cover. The insurance regulator gave a clarification in India that all the COVID cases. Why I say about India? Because it is one of the most populated countries, next to, almost equal to China now. The thing is that proactively, when the regulator says everything is covered, plus it said we want a simple COVID protection policy, one on the life side, one on the general insurance side, covering hospitalization, one on the general side, and also covering death from the life side, which is on a parametric situation. Both models came up. So there was some responsible action from the government. Previously, we have seen that in the case of floods, that you don't have to do surveys, and without surveys you can pay, but that is non-life insurance. But similar kind of situations have come up in health insurance, and people have decided to pay. That is another. The third aspect, and which is most important for the insurance companies, is that during the pandemic, people used to have a certain kind of comfort sitting in their homes and ordering by Swiggy and whatever apps, and things getting delivered at their house at top speed, food and provisions especially. People have got a perception that if that can be done with fast-moving consumer goods and food, why not insurance? Why can't insurers also deliver whatever they promised to us within an hour or within 2 days or within a day? So that perception, the people who were previously willing to wait for a month without batting an eyelid, they are now keen to get insurance policies to perform within a short period. So that is putting more responsibility on insurance company. The society's expectation from insurance has changed. And also they feel that, okay, many of your rules that you could break once because of that situation, you could still think of relaxing some of the rules for future. So these are some of the takes on that.
So prevention, innovation, and just in mask, there's also some cultural aspects there. I can tell you, I was surprised how living in Europe, and the reaction was quite different, having lived in Asia before, where if there's something, we just follow it. And there's actually a pushback on freedom. And sometimes I get confused. Switzerland is by Germany. In Germany, you have to wear a mask on the train. Once you cross the border, you don't have to wear a mask, and people think, but COVID doesn't have a border, right? So you get confused on the rules on this, and so there's a lot to learn, I think, from this, and also cultural issues as well. I think the bird flu and SARS really put a lot of, effort here in Asia around that. I wanted to touch on one other big issue that I think is affecting everyone, which is the cost of living crisis happening around the world. What are your key insights? Because, insurance is you need to pay the premium, right? And so how is this impacting businesses like life and health insurers? And is there an opportunity here, or yeah?
Big subject. I mean, what I'd say maybe is cost of living crisis typically refers to my ability to access the bare necessities of everyday life, right? And I think for our industry, obviously, we don't produce food, we don't produce housing. What we do is we facilitate protection and we facilitate access to healthcare. And I think this is the role that life and health insurers really need to focus on when it comes to the cost of living crisis. And as you said, I mean, COVID has just further exacerbated the inequality that we see. Healthcare, private healthcare is now less affordable and less accessible than it was in 2019 because public healthcare sectors were decimated by COVID and the resource concentration that went into there, which meant you had scarcity of resource in private healthcare, which meant prices went up, so insurance premiums went up. So I do think in solving for this crisis, or this inequality, the focus has to be on life and health insurers to say, how do we create more accessible, more affordable access to healthcare? And there's no silver bullet, there's no right answer, all markets are different. But I think there are a lot of things insurers can do. George mentioned earlier, I think, talking about prevention, leveraging the power of intermediaries. We don't talk about intermediaries enough, but we are an intermediated industry. In China, for example, can I increase the health awareness of 1.4 billion people? Of course not. There's 9 million agents, though. So let's go focus on these guys first, and they can amplify the key preventative, the key messaging, the key awareness factors back into the population. Technology has evolved now with things like telemedicine. I mean, in Hong Kong, we do over 1,000 telemedical appointments every day, and it's great because it saves it's less costly than going to see a doctor, so we save money on our claims cost. But again, we're facilitating cheaper access, more convenient access to healthcare. And I think there's a range of models and products evolving around the world. South Africa's been the leader for years, and I think that's being exported into other markets now around these shared value models. If you live a healthier lifestyle, then we'll give you money back, or we'll reduce your premiums, or we'll give you rewards or incentives. And I think that is, again, another area where insurers can reduce the cost, and particularly that upfront cost, the upfront premium cost, and spread that value over the lifetime of a contract. That's the role I think we have to play.
And George, what about the Indian subcontinent? What has been the impact so far, in an insurance context?
See, I would like to point out two things. One is a tiny little country like Bhutan. Something like 6 years back, they did not need a health insurance product over there because the government used to take care of all their medical expenditure. And if the hospitals over there cannot cater to their health problems, there was a system whereby the sick person attendant could fly over to India, and the government would pay for all the treatment costs, including flight charges, and give a small pocket money for the people who are taking care of the sick. So this was working fine something like 6 years back. Just 2 years before COVID, the number of sick people started increasing, and there was a mismatch with the government budget, and so there was a slow need for the health insurance product. So there was this, because there was a waiting period. So if you want to jump the queue and go earlier, you need to have a health insurance product. That system has sort of worked in two ways now. One is the government had to build in more infrastructure during the COVID period, so by which they are able to retain the risk, retain the treatment, so it will be addressed within the country itself. This has happened in many of the small towns and cities, within India also, the same trend. The government hospitals have improved their capacity, even the private hospitals also. This is one thing. But on the other side, we are finding people, as it was telling earlier, people dying after one attack of COVID, 2 attacks of COVID, and sometimes the third attack. The second attack was more created quite a number of casualties, and maybe it was something to do We don't know. Some people talk about it, about the interplay between the vaccines and the COVID attack. So these things are yet, people are yet to find out an answer. Sometimes they say that the top T, the protein level increased, causing heart attacks. We don't know. There are gaps which happened over there. But then we have seen another thing which has happened. The fragile nature of the society has become little more pronounced, because many people lost their lives, the breadwinners were lost, many people lost their employment, and many people lost their earning capacity to a large extent during the COVID period. So people have become more vulnerable at a particular class level. The rich, it has not affected in a major way, but for the poor people just above poverty line, many of them have got pushed back into the below poverty line. So that puts more onus on us and more onus on the governments to cater to their needs and to make health accessible to them.
I have one last big issue for you. I want you to comment on, and it's something that I think is severely underestimated there. Just like on climate change, we said it's not just about floods and cyclones, it's also about extreme heat. So when you talk about health, people normally refer to physical health. What about mental health? Everything that we've discussed has a mental health impact. What has been the agenda there, and for a life and health insurer, is that something that you are progressively seeking to, and I know, Ed, you're involved in hospitals there, and I think in the community specifically on that, but what is the agenda here? And you can start, George, and move on to Ed.
This is something which we have been discussing a little, something like 2 years before the pandemic also in India. So this discussion about mental health, so the regulator, we had a lot of deliberations on that. Actually, I convened one seminar also on the topic about mental health and about genetic diseases. Okay, so we gave a report to the government, and actually the regulator was there as part of these discussions. The regulator gave a report to the government, and a circular was issued by the regulator telling that all insurance policies, all insurance companies should cover mental related illnesses as part of the covers that they offer, and also any genetic diseases are also to be covered. You cannot exclude genetic diseases as well as mental health. So this was something which came in from the government, because the insurance companies by themselves, they wouldn't volunteer and jump into it. But then when the regulator says, they had no other option but to accept it. So this was something which was a learning. And when we did that seminar, we actually came to know that there are many people who previously never thought of meeting a doctor because of a mental health problem and the social stigma attached to that. There was a lot of social stigma attached to mental health, mental disorders, and taking treatment about that. That is becoming thinner and thinner, and more people are approaching hospitals. More people are not, they may not be claiming, but then people need more of counseling. People need more of treatment, and the earlier we recognize it in other countries also, it will be good. Even in India also, that social stigma is still there. It is not that it has gone away, but it is not as much as it was in the past. But this is definitely an issue, Butch, that we need to address.
I can definitely relate on the social stigma, because frankly, also like in the Philippines, for example, like if you hear about it, the traditional response is like, what's wrong with you? I mean, aren't you supposed to be happy and everything? Don't take it so seriously, but it is a serious issue, and people sometimes scoff at it. But Ed?
Yeah, completely. And I mean, including in China, right? There is a serious stigma, and it's not something that's talked about, right? And it's something that's hidden. I mean, I guess sort of what is the role for the life and health insurance industry? I think what we're seeing now, especially on the back of COVID, is massive awareness that we need to do something. And regulators in Hong Kong, I was even on a call with Andrew Bailey, the governor of the Bank of England last year, where he was telling a bunch of UK regulated banks and insurers, you guys need to sort this, you need to do something. And I think the challenge at the moment, there's a lot of will, there's less skill. because it's a newer risk. People don't know how to price it. They don't understand the supply chain. How much does a psychiatrist cost? How much does a psychologist cost? How much does a counselor cost? How many times on average would someone go see one of these three sort of pathways, right? So if you don't understand the supply chain in our industry, where it doesn't matter whether you're insuring motor insurance or brains, right? It's going to be hard. What I'm seeing, especially in Asia and in the UK, is actually quite a lot of good progress on group medical. So what insurers are saying is it's too hard to write this stuff on an individual basis. The anti-selection risk is too high. But on group, I can pull risk. And the best thing about group medical is I got a bunch of employers, a bunch of HR directors, a corporate saying, please give me something because it's on my scorecard and this is something I want to show to my employees. So there's a lot of what I'd call mental health products now coming through group medical, treating it almost like an outpatient benefit, a traditional physical outpatient benefit, typically price controlled by caps. So ultimately, whether that's 10, 15, 20 visits to a counselor or a psychologist, that's where I think the industry's going. It's certainly what's happening in North America. It's coming into Asia, as I said, and the UK. But let's see. It's evolving fast. And again, this is where digital, in the same way that telemedicine has transformed the health industry in China and in Hong Kong, this is where digital and technology should also transform this as an insurable risk and as an insurable benefit.
So, and this is why life and health and sustainability fascinates me. I think those issues are event-wide conference, full-day conference issues, right? But we're just scratching the surface here. But we ran out of time, but my point is, perhaps Ed, you can point us to what's happening on June 21 in London. For something, for folks to see what's next in line for the PSI.
Sure, so June in London, June 21st, yeah, okay. June 21st in London, there'll be a CEO event where we will be releasing a white paper on preventative healthcare and the role of the private insurance sector to increase accessibility and affordability globally to healthcare. There'll be a bunch of very smart people and me talking with different viewpoints from around the world, including I think the CEO of Discovery Group from South Africa, CEO of AXA Group. So it's exciting, and I think it is really the first time that we're deep diving into health. And considering all anyone's ever spoken about in the past 2 years around the world is health, is the right time to do it. Yeah.
Right. And just to be sure, I'm not sure if I checked in earlier with the crowd. Is there any question from anyone who wanted to ask earlier? Because I kept on asking earlier in earlier sessions. Okay. Yeah. I didn't want to be presumptuous for this session, but I think it's good that I did ask.
Thank you. It was a really very elaborative session on life and health. I would want to ask regarding the cancer and also mental wellness. Mental wellness, we also, like you mentioned during the COVID time, we did do a lot of corporate sessions for many corporates and individuals, and also included this in our women health insurance, the mental trauma thing. But how do you, but now during the pandemic, there were less number of deaths in our country. People are more resilient in that case, but cancer is more people are getting more, we're getting more numbers. How do we prevent, you mentioned regarding awareness and all, and how do you embed this into the health? Because people are more coming to us. Can you have some sort of treatment cost included in the policy? So how do we start and how do we take it forward?
I think you can, and again, it depends. It's going to vary market by market, but I'll give you an example, right? So in Hong Kong, what we do for our cancer policies, we include a complementary genetic testing kit. So this is a testing kit that provides, with saliva-based kit, And what does it give you as a customer? It gives you a genetic breakdown of any inherited or hereditary cancer mutations that you carry in your DNA. That's information for you as a policyholder. It is not shared with the insurer, okay, for various ethical reasons. And again, why is that important information? Is that an answer? Does it tell you you're going to get cancer or not? No. But what it does is it tells you you may have a higher risk of this. And to put that into context, for things like colon cancer, which is, I think, the fastest growing cancer amongst men, the World Health Organization says you should go for your check at 50. Well, if you buy a cancer policy or a critical illness policy, you do your genetic test and it tells you you've got a higher risk. You don't wait till 50. You go at 40, if assuming, or 30 or whatever, right? So I think that's an example of how, again, the technology's there, the risk markers are there. It's not as expensive as it was a couple of years ago because this stuff is mass produced and mass processed now. But how do you help customers become aware of their inherent risks and manage their residual risks down?
And my last question, whether this cancer now it's going like a pandemic, is it more inherited or is it more of a lifestyle and the pollution and the climate change?
Great question. I'm not a doctor, so I can't answer it very well. But nature and nurture, it's both. It's a combination of both, right?
I think there have been studies by the World Health Organization on environmental factors contributing to that. Yeah, so I think it both, nurture and nature would be a good way to summarize it. Any parting shot, George, before we close? I'll summarize.
Yeah, one point which I wanted to talk about is that we are all aware that there are various steps from different insurance companies, some progressive insurance companies in tackling ESG issues. We have seen from Green Delta, we have seen from many other countries. So the challenge is, this is definitely great that what they are doing, but the thing is, how do we consolidate everything at a national level or at a bigger platform? Many companies do on their own will. They want to be at the global level. They see their global brothers in the insurance industry in other countries doing certain good things. They feel, okay, we also should do it in our country. It is good for us. They want to get into that class of doing certain things. But then at a country level, unless the entire insurance association of a country or the insurance regulator and the government also supports it, this becomes costly for an insurance company to do it themselves because they don't get a direct return out of this. It is only an expenditure account. How long will the efforts towards sustainability be sustainable? So the making these efforts, individual attempts towards sustainability, towards sustainable insurance, making it sustainable is one major challenge. So we need at the PSI level to talk to different governments and make them aware that, okay, you need to take some ownership in this. It is your skin also should be in the game. You should invest, you should give incentives so that all the insurance companies work together. There's a need of collaboration, and for that purpose is a lot of learning which has to be passed on. I would rather request because Mr. Buch is here, we need to spread this message more and more among the governments and among different insurance, the different insurance companies, different insurance associations across the globe. And you have been doing a great job in this last 12 years, something like 11 years. Please do continue doing that. The world needs it even more in the post-pandemic year.
I've lost my hair already, and all the white hair came out in the last 10 years. But my 3-line summary: an ounce of prevention is better than a pound of cure. A sound mind in a sound body, and sustainability is ultimately about people. So life and health insurers really have a key role to play. So please join me in thanking Ed and George for their insights. And thank you everyone for staying on and for being resilient, and enjoy the rest of the afternoon.